How is everyone this afternoon? Excellent. How is everyone this afternoon? That's better. My name's Shannon Rusk. I've been asked to give you a welcome to country. Most of us here know what a welcome to country is. Who's from Brisbane? Yep, you would have seen a welcome to country before. Most other cities around too. It's not something that event organisations and the Aboriginal people put together as a package in the past 10 or 20 years. It's something our people have been doing since the beginning of time. On my father's side is Aboriginal. I'm from both the Turrbal and the Yuggera clans, which occupied Brisbane City, and also have connection to the Quandamooka, just off the coast of Brisbane, and the Sunshine Coast and Gold Coast region. So it's a gorgeous area that we take in, from rainforest to rivers to the ocean waves. I deliver a lot of these in a year. It's something that has been an honour, I suppose, amongst my people to be chosen at such a young age when I was 19, back in 1990s, in my prime. And yeah, I'm still in my prime, don't worry about that, but a long time ago. Yeah, all right. But, and some of the senior elders there chose me to deliver these welcome to countries on behalf of them, and I've had that honour ever since. We're divided by the creeks, the rivers and the mountains. The Aboriginal people in this area, if you go over the Caboolture River and repeat it after me, they will say the greeting word of Wanya, up where the crocodile hunters are. If you go towards the Gold Coast and you go to Dreamworld, SeaWorld, all those different places there, anyone here from the Gold Coast? Okay, all right, one, excellent. All right, so if you go over there, mate, you say Jingaree. Well done. You go out to the Quandamooka region, out the end of the river, and if you go out to the bay, they're going to say Yirra. If you go across Sanford Valley, Nanango, Cherbourg, Mergen and Idesvale, all those places, Kingaroy, they're going to say Yanande. There you go. Pretty diverse in a small area. Now you're talking our language. I'm also a songman of the tribe, and if you go over those areas, just to let you know, we used to use a message stick. It had carvings or paintings on it, gave reason why your particular family was travelling from country to country. You see, each person here had a messenger man in their tribe, and he would go across and he could speak. My grandfather was the last one of our tribe, and he was able to speak 16 different languages from around the local area. Amazing, huh? And he would travel with these message sticks and seek permission for the tribe to go across. Once then granted permission, all your tribe can go across. Without that message stick, just like the border police, you could be speared dead on the spot. So we're glad they invented mobile phones. We ring one another up now. Oh, we do. Uncle Arnie, is it right? Yeah, come on up, nephew. It's fine. Okay. But can I ask you all to stand up? This is the other part that we do. The part that I'm doing is actually the spoken address that the elder or spokesperson of the tribe, after you seek permission, that's what you do. Now then, we begin to do a dance, so that's what we're about to do now. Anyone love dancing? Friday, Saturday nights? There's a brewery over there, so who knows? All right, so this dance we're going to do is about the eagle. It's quite simple. If the men could clap their hands like this. That's it. All right. Now, men, there's one other thing that we like to do. We like to grunt like koalas. Can you all say eight? Can't tell you why that koala grunts, by the way. It's after dark. On the count of three. 1, 2, 3. 1, 2, 3. Ladies, if you could put your arms out like an eagle. Excellent. One foot in front of the other. And you're quite simply going to, don't go too fast, men. All right. You're quite simply going to slide your feet and shuffle your feet. It looks like this. Are you ready? Step, 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 yay! Ooh. Let's hear it. Aye, 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 aye. Brr. Big round of applause for the ladies. Very well done. Now don't sit down yet. There's more to do. All right, ladies, you're going to keep the beat, and the men, you're going to do some dancing. We need the arms out like a bird. Puff your chest out like a warrior of the tribe. Now, the other part, which is fun, you squat like you're going to the, too much information. All right. And we're going to go and ooh, we go knees in, knees out, knees in, knees out, knees in, knees out, knees in, yay, ooh. Go now, knees in, knees out, knees in, knees out, knees in, knees out, knees in. Yay! Big round of applause for the Warriors. Ladies and gentlemen, welcome to Brisbane City. If you're looking for a welcome to country for your business, look up www.tribalexperiences.com. There's always a place to promote your business. All right, thank you, ladies and gentlemen. Welcome. Thank you.
Thank you, Shannon. Ladies and gentlemen, just a few words before we kick off. For those of you I haven't met, my name is Tony Shipman, and as the managing partner of BDO, I'd like to welcome everyone in today and tell you an interesting story. So, a couple of weeks ago, two of our marketing team came to me and said, "There's a really good idea, Naomi and Katie, wherever you are. That's a really good idea. I think we should welcome to country. It's a bit different." And I said, "Yeah, okay, whatever. Okay, that's fine." So, thank you, Shannon. That was very interesting. They said, "You won't regret it." So, very funny. So on behalf of everyone, we'd just like to thank everyone today. We do appreciate you're all busy with your day jobs, and to come to an event needs to be valuing your time. In some respects, this is an inaugural event, but for those of you who have been here before, you'll know we've had events in the past which we called an economic and political update. I think we ran that for about 10 years. But based on feedback from our clients, we try and revamp the format, and this year we're doing a little less politics and with a greater emphasis on economic and business focus. This is a great venue. I think for those of you who've spoken on the way in, I think we all can't believe how good this is and how it showcases the best of Brisbane. From a BDO perspective, this is an important event on our annual calendar. We have a number of events, but this is one of our leadership events. We like working with our clients every day as they navigate an increasingly challenging business environment that will have opportunities. So we're hopeful today in that context that you'll all take something away from the event, from the learnings and insights, particularly from our panel of passionate experts, which will be introduced in a moment. I'd like to make a special welcome and thank you to Madonna King, who's going to be our MC today. The role of the MC is critical in these events, and Madonna's kindly agreed to come today and help us. So thank you, Madonna. And she'll introduce our guest speakers in a moment and facilitate the conversation. For those of you on social media, please join in the conversation. If you want to share posts and photos, then please tag BDO Australia and use the hashtag BDO Outlook 19, and we're also recording the event, so that'll be all on our website in the next 48 hours. Also, we've got multiple ways you can interact with our panel in due course. So we've got the old-fashioned way. We'll have people wandering around with a mic and you put your hand up and ask a question. Very important, although we've got technology as well, so you can use Slido and go to the www.slido.com site, and the event code is, again, hashtag BDO Outlook 19. So, again, thank you for your time. We do appreciate you coming along. I'm sure it'll be a great event, and please join me in welcoming Madonna to the lectern. Thank you.
Thanks, Tony. I know you won't regret that welcome to country, but you might regret the photos your marketing department took of you dancing. Good afternoon. You know, Queensland is always an enigma. We're proudly the nation's most parochial state, and yet we're the state most exposed to international fortunes or misfortunes. We're so rich with sunshine that we won't push our clocks back an hour for extra daylight in summer. Our state's finances are based on coal revenues, but our state government has made a spectacle of itself by its slow handling of approvals for a relatively small new mine in central Queensland. We're proudly free enterprise, but the biggest employment growth over recent years has come from hiring public servants. We're famously decentralised, but the wealth and welfare divide between the city and the regions is growing. So is the political divide. Federal Labor only holds one seat north of the Brisbane River now, and it reaches less than 10 kilometres from the city centre. Our north regularly gets flooded, but we don't have the dams to hold any of the water to insulate us from the droughts that come just as regularly. Post 2 budgets and a federal election and just over a year to a state election, it's a good time to consider where we're headed. The international headwinds are strongly against us, perhaps. Chinese investment flows to real estate are slowing, and its purchase of our natural resources is increasingly likely to be vulnerable to political pressure. We might be caught in a fight over trade we neither wanted nor started. As well as the impact on resource and agricultural exports, it could impact the welcome revenues we receive from tourism and education spending. State government debt is growing, not declining, and there are no silver bullets in future budgets that will change that. Our population is ageing faster than the rest of the country, and that will add to the costs of the health system and our support services. Our demand for infrastructure is growing, and it will keep growing as future Queenslanders compare what they see is happening in the more prosperous capitals with what they see not happening here at home. And yet we retain our sunny outlook, a belief that she'll be right. That optimism is worth bottling, because there is a lot to be optimistic about. Queensland has established a formidable education industry that not only serves the needs of our region, but adds to the relationships the state has throughout Asia. We are a stable home for investment. Beyond the Adani imbroglio, other resource companies are continuing to invest in our mineral provinces and, yes, coal. City-changing infrastructure is pushing ahead. By 2025, the South East will be seeing the benefits of a new urban rail connection, an extension of light rail south to Burleigh Heads, and hopefully progress on a new interstate rail line that connects regional New South Wales and the Darling Downs more directly to the Port of Brisbane. There's the big tourism infrastructure. A third runway will build the capacity of Brisbane Airport and make it an alternative transit for international airlines. And the Star Entertainment Resort in the heart of downtown Brisbane will change the way tourists across the world look at our city. Add in the likelihood of a new live entertainment centre, and you are looking at a capital built and run for the 21st century, one well equipped to host a future Olympic Games. When Scott Morrison won the federal election on the back of a strong Queensland support, he asked this question: how good is Queensland? Most of us who live here already know the answer. Yes, it's pretty good, even in the years when we don't win a State of Origin series. But it will only be as good as we can make it, and that means coolly assessing the outlook and taking the right decisions in the short term. And that's what we're going to do today with a stellar panel. Just a couple of housekeeping matters before we get started. The restrooms are located downstairs through both doors on my left and right, and just ask a staff member if you cannot find them. Can I check your phones are switched to silent? Please keep them on so you can lodge your questions via Slido. Our official hashtag, as Tony mentioned, is hashtag BDO Outlook 19. Please use it, and you can tag us at BDO Australia. Make sure you know the closest exit, but in the unlikely event of an emergency, we would just follow closely the instructions given to us by staff. Now, to get us on our way, it is my pleasure to introduce Martin Lakos, Division Director, Wealth Management, Banking Financial Services at Macquarie Group. A regular economic commentator on all major Australian networks, as well as CNBC Asia and Bloomberg, Martin is able to confidently address everything from big picture macroeconomics and current trends to interest rates, investor strategy, and what is happening in the key global markets we need to know. His financial career spans 40 years, having started on the Australian Stock Exchange trading floor in 1979. So what do we need to know? Let's find out. Ladies and gentlemen, a big, warm Brisbane welcome for Martin Lakos.
The Dow closing down to more than 500 points today. A second day in a row of triple-digit losses.
Fellow Americans,
I alone can fix it.
we have to make a much better deal with China. Now they have a very unfair playing field, and I'm turning it around.
One of the purposes of our cut today is to support the expansion. If there is a downturn, we'll use all of our tools aggressively when that time comes.
I have always believed in miracles. We've got a lot of work to do. And we're going to get back to work. We're going to get back to work for the Australians that we know go to work every day. And they're going to get a go from our government. God bless Australia.
The Queen has invited me to form a government, and I have accepted. The doubters, the doomsters, the gloomsters, they are going to get it wrong again. Do not underestimate this country, and that work begins now. Thank you very much.
President Emmanuel Macron may have scrapped the fuel tax that initially sparked the Yellow Jacket protests, but is it a case of too little too late?
The German economy has been somewhat out of sorts. What was once the Eurozone's economic powerhouse has been weakened by slower global growth and political uncertainty.
The world is sort of a flutter over news out of China that shows growth could be slowing there, and it's taking in a lot of other Asian markets with it.
Indian Prime Minister Narendra Modi has been given a second-term mandate after scoring a landslide victory in the country's general elections.
So help me God. Thank you and good night.
Well, good afternoon, everyone, and welcome. And obviously by that reaction, there's a few of you, at least, excuse me, who are familiar with the HBO series Game of Thrones. And it's the Game of Thrones opening sequence that we've used for today's presentation. And for those who aren't familiar with this series, The Game of Thrones, it's a medieval fantasy story. And it's an interesting story because it's one very much around the thrust of power, the seeking of that power and gaining the throne. We have tribal warfare, we have character assassinations, and there's the occasional sex scene. Sort of sounds like the White House over the last couple of years, doesn't it? But the notion that, and the undercurrent of the series is very much around this notion that winter is coming. And the question mark has to be, are they prepared? This is a warning. So if you forget the fantasy side and think about the real world, it's a really good question. Because we've just experienced, and we're maybe towards the end of, a 10-year economic expansion. And you have to gauge in terms of economic cycles, we're nearer the end of that cycle than we are at the beginning. So for the real world, is it relevant that we are heading towards a cold, dark place from a global growth perspective? It's my job this afternoon to take you through Macquarie's view of the world from a big picture, and of course potentially how that may impact Australia, and of course very much businesses and business owners and individuals. So let me take you through what's been going on. In 2017, that was the year by which global growth was synchronised. Every key contributor to growth was heading the right direction, and also some of the economies were actually running above trend. That is, they were pedalling pretty hard, pretty fast, and global growth was tracking well above 3%. We moved into 2018, of course, the trade tensions started to emerge, and that was obviously a bit of a concern for the world. Of course, there's been no resolution, and those trade tensions and those dynamics are continuing and are with us and are starting to have a real impact on global growth, and in particular, obviously, the way trade is done. And there's some interesting trends taking place in regards to that. Early in 2018, the US Central Bank, the Federal Reserve, was continuing to raise interest rates. They were concerned about inflation. Of course, inflation is the bogeyman of every central bank around the world. They wanted to make sure that with the economies running so well as they did in 2017, that inflation would not get out of control. So interest rates in the United States of the previous 4 years had gone from 0 to 2.25%. And the markets were saying, whoa, how much higher are rates going to go? Is it going to start impacting activity? And of course, that was one of the big concerns around the world. So there's a whole range of risks that were emerging. And those risks in this particular order I've mentioned here was certainly the concern about a growth slowdown in the world, largely related to the fact that trade tensions were building and the way supply dynamics and supply chains were definitely changing. I'm going to talk a little bit about the behaviours of CEOs around these trade dynamics. I think there's some really interesting observations in regards to that. As I mentioned before, the markets were getting very concerned that the US Central Bank was going to continue on its way to raising interest rates. We had a major correction in November, December of last year, and the US Central Bank stood up and listened. They then made a decision that rates are now on hold. And since that time, in fact, they've actually cut rates. But it's very interesting because global financial markets, particularly the bond markets, there's a number of indicators now suggesting that we might be on the verge of a recession, or certainly in the next 15 months, a recession may emerge. I'll talk about that as well. And then, of course, this has been around for ages. Many commentators talking about China, and that the China growth was about to slow. China is very important, particularly for Australia and our relationships, but it's the world's second largest economy. It's a very meaningful contributor to global growth overall. It's got very strong ties, obviously still, into the United States, into Europe and here in Australia. So if China's slowing, that's not great for the rest of the world. And then, of course, there's Australia. So we've actually sort of muddled along to some extent. We've had 28 consecutive years of growth, which is a world record, a personal best, which is fantastic, of course. But again, you'd have to wonder whether, in fact, that record is about to be broken. And are we heading towards a recession along with the rest of the world, unless we see some more action by both the Reserve Bank and the Australian government and state governments as well. So I'm going to take you very quickly through all those risks and try and give you a sense of what we're seeing at this point in time and going forward for the next couple of years. So Macquarie, through its analysis, uses a lot of leading indicators, and some of you may be familiar with this particular indicator. It's a very reliable indicator. It's called the PMI, the Purchasing Managers Index. And quite simply, it's a survey across businesses in all three key segments around economic growth. So that's services, manufacturing and construction. And the survey is pretty simple. It just asks those participants in those three segments, what does your forward order book look like? What does the future economic activity that you're seeing in your business look like? And when you index that survey and it comes in above 50, it's suggesting the survey is saying there is ongoing economic expansion, albeit it might be slowing at a different rate and pace of growth. If that survey had fallen below 50, it'd be suggesting the participants are saying things are contracting. Whereas you can see, 2018, this particular leading indicator has peaked. And we've seen global growth slow, and the rate and pace of that growth is definitely slowing. But we're still seeing positive momentum. That indicator is still above 50. So for us, as one of a number of leading indicators, it's certainly indicative there is still ongoing momentum, albeit now at a lower pace of growth. So that's okay. Then, of course, you've got to be thinking about, well, where are we today? And this chart shows really what we've been observing for quite a number of years, that the world's been going through a number of mini cycles. Despite the fact that we've had positive growth, we've definitely had a couple of mini cycles. 2012 was impacted by the European debt crisis. 2015 was impacted by too much debt in the Chinese economy. We started seeing the Chinese economy slowing. And where we currently are is now, as you can see by the orange line, trade is having quite an impact on growth. But it's Macquarie's view that with the response from central banks around the world, it's likely that this is just another mini cycle, and we're not yet at that turning point or that inflection point that we're heading to a recession tomorrow. But of course, the question is, how much more stimulus can central banks put in place into the global economy? In Europe, interest rates are still zero. They're negative in Japan. They're negative in Switzerland. And the US, although having increased interest rates, is only just now starting to turn interest rates down to try and support growth. So again, we're at that sort of stage of the cycle. The biggest risk, without a doubt, is around trade. And if we do see those trade tensions continue for an extended period of time, then I think most of us in the banking world will be getting more and more concerned about global growth, and particularly here, growth in Australia. So what about this trade dynamic? So I've taken this chart from the PwC Annual Global Survey. It's a really interesting survey. There's quite a number of charts I would have loved to have used, but of course I've only got about 72 slides to get through, so I had to cut it back. You think I'm kidding? So this survey is basically, one of the questions was to Chinese CEOs only. Now the filter was, of all CEOs around the world, are you very concerned about the growth prospects of your business for the next 12 months? And every single US and Chinese CEO said yes, and even half of the remaining CEOs also said yes. So the question to the Chinese CEOs only was, which three territories, excluding the one in which you are based, do you consider the most important for your organisation's overall growth over the next 12 months? Now, the previous 2 years, the previous two surveys, Chinese CEOs voted with their feet and nominated the US as the most important economy and territory that they want to do business with. Quite interestingly, in December of last year, when this survey came out, who came out number one? Australia. US number two. And what was really interesting is, you have a look, where it says no other territory of the previous 2 years, now Chinese CEOs are moving to substitute the US by doing business with other territories. 17% of CEOs are now saying we're going to do business elsewhere than we haven't done before. So clearly there's a significant behavioural shift taking place, particularly around supply chain dynamics. And of course the question mark is that particular survey really just a knee-jerk reaction or an anti-American sentiment? Well, we're going to have to wait and see for the next survey. But it's really interesting because clearly the Chinese are saying we want to do business with Australia. We like doing business with Australia. We do a lot of business in iron ore and obviously in energy, but also we do great business in education, tourism and healthcare. And they're areas from a services perspective that we need to continue to concentrate both in China and to some extent India as well. So I thought that was just a really interesting observation in terms of changes of behaviours. But this change of behaviours potentially could be permanent. Don't forget the Chinese have a very different time frame by which they're viewing trade as against the United States. President Trump's got an election in November next year, 2020. He would love to have some form of deal with the Chinese inked by then. The Chinese have got not an 18-month time frame, they've got a 30-year time frame because they're operating on a big vision about their country, and that's the basis by which they're negotiating. They've also got a $400 billion credit against the United States in terms of trade. And of course, President Trump is wanting to get that $400 billion debit on their side down to zero. That's just simply not going to happen. The US is the world's largest consumer and is not self-sufficient in its consumption. So these dynamics are in play at this point in time. And of course, then we've got the great disruptor in President Trump in terms of how he uses his negotiating skills. It's known as Twitter for some of those who haven't observed. So what about interest rates in the US? Now, the world's largest economy, the US, the central bank there is probably the most important because it really, to some extent, directs where monetary policy in big-term trends is going to go. This chart shows two things. The orange line is basically a futures on the expectations of interest rates. And as you can see from my opening remarks, the markets were expecting the interest rates to continue going from 2.25% to 3% up to November of last year. Then, of course, we had that big correction in the markets. Inflation seems to be under control, although wages are growing in the United States, not to the extent by the US central bank was being concerned. And, of course, that big global market correction of some 20% in US market terms made the US Federal Reserve sit up and listen. They then decided to put interest rates on hold, and since that time they've of course cut rates, and there's an expectation they might cut rates one more time down to 1.75. But global financial markets are saying, hey, things aren't as rosy as they used to be. We expect rates heading to 1.5%. So we've now seen a shift or a change in this interest rate cycle in the United States, and it does also mean that we're going to see other central banks continuing to look to support their various economies. Even the European Central Bank, where the cash rate is zero, is continuing to add liquidity into the European economy, continue to try and drive growth. Unfortunately, Europe is in not great shape at this point in time. What about the possibility of China falling over? Well, the key thing about China is this. President Xi Jinping, when he came into power 6 years ago, has continued to talk about stability around the economy and also stability around the political side. Now, it seems to me that he's sort of fixed the political side for the moment because he's now president for life, or at least for the next 5, 10 or 15 years, for as long as they're prepared to keep him in power. But from a policy perspective, hopefully we'll see some stability and some continuity from the Chinese in that regard. But more importantly, can the Chinese continue to support their economy from a growth perspective? And the answer is yes, they can. Because they've got a very, very large treasure trove of funds that they're directing into their economy. And they're currently about to embark on a new stimulatory package in regards to infrastructure spend and, of course, monetary policy as well. So they've already started easing the constraints on bank lending, allowing the banks to lend a bit more money. And of course, this does have an impact because when the authorities in China say to the banks, please start lending, they do. Equally so, when the Chinese authorities tell the banks to stop lending, what do you think they do? They stop lending. So there's lots of more levers that the Chinese authoritarian government actually has at its disposal. So this chart is another one of those PMIs, Purchasing Managers Index, and it's specific to China. Now, the thing about China is this, and for those who may have seen my presentation of mine before, I do talk about China because I think it's fascinating, and of course it's very much part of our future. The Chinese over the last 30 years has shifted 300 million people to a better standard of living. That's one USA in size terms, population terms. So a massive amount of investment has taken place. And as a result of this shift now to better standard of living, where the per capita GDP from China was 20 years ago $2,000 a head, is now $8,000 a head. So that wealth effect has gone up 4 times in 20 years. There's high levels of disposable income and the middle class has expanded. So a result of which we're seeing greater demand by the consumer on consumer services and consumption generally. And so now what you've got is an expanded economy of which 40% is directed to consumption and services. So this chart shows 2 things. One, the slowdown in manufacturing, that's the orange chart in terms of the contribution of growth to the Chinese economy, but you can see a very strong pickup in the survey on services. And we think services is going to continue to be a major contributor to growth in China going forward. So what about recession? What about those recession indicators? Well, the last couple of weeks we've seen global financial markets get quite volatile once again. Again, they've been focusing in on this particular indicator. So this is an indicator called the yield curve, and you can have this indicator across any key economy. And for those who aren't aware of what the yield curve does, it quite simply compares short-term interest rates with long-term rates. And a normal or a positive yield curve is when short-term rates are lower than long-term rates. That makes sense, doesn't it? You want to borrow money for 10 years, you've got to pay a time premium for the privilege. But there have been times in past cycles where we've seen that relationship between short-term rates and long-term rates actually reverse. It's called a negative or an inverse yield curve. And it's typically driven by central banks raising interest rates really hard and really fast, trying to put the brakes on an economy and reset an imbalance. Back in 2000, at the time of the tech boom, which then became the tech bust, the US central bank was getting very concerned about asset price inflation. Again, inflation was a big imbalance. So the US central bank started raising rates really hard and really fast back in 2000. As you can see, that relationship went negative. Short-term rates were actually higher than long-term rates. And that obviously has an impact on business investment, business activity, and consumer activity as well. Back in 2005, the US central bank started raising rates again. They were getting very concerned this time around, not about inflation, about debt. Of course, no central bank around the world picked the depth and breadth of the GFC and the amount of debt that had been embedded in the global economy. Not just the debt, but the debt on the debt and the derivatives on that debt as well. Started raising rates, trying to slow down credit growth, slow down the banks' lending because they could see the amount of leverage that was building. Of course, as a result of which, that was certainly one of the reasons why we saw a slowdown was the fact that rates went up, but more to the point, the amount of debt that had been built into the economy was certainly not predictable, and that was basically the reason for the deep recession we had called the GFC. So, since the GFC, we've had the yield curve very positive, but more recently it's been declining. And as you can see, that yield curve has just turned negative. Now, we can't rely on one indicator alone, and we've got to be looking at the circumstances and potentially the imbalances that are building in the global economy. At the moment, you've got both this yield curve, which is the comparison of 3-month money to 10-year money, and also the yield curve of 2-year money compared to 10-year money. And it was that particular yield curve that turned negative last week that saw that very big correction in US markets. Now, they are strong indicators, and by all accounts, you'd be suggesting that we're going to have a recession, albeit shallow potentially, sometime in the next 15 months. But then you've got to be asking the question, what's going to drive the recession? What's the big imbalance in the economy? What's the event? And at this point in time, we can't see a single event. Inflation is under control. And although debt is high, particularly household debt around the world, it's not to the point in regards to a big fallover in debt, largely because interest rates are so low, debt serviceability is okay. So although we are watching this really closely, and so are the markets, by virtue of the fact that the US Central Bank is now starting to cut interest rates, it may well be they're going to kick the can down the road and we may avoid a recession. And if we do happen to have a recession, or even a technical recession, which is 2 consecutive quarters of negative growth, it's bound to be very shallow because there isn't that big imbalance that we saw as part of either the tech wreck or the GFC. So how have global financial markets been handling all this volatility? Well, this chart is a chart that you can see, the grey line is of the volatility index, the VIX index. And quite simply, the VIX index, it's listed on the Chicago Board of Trade as businesses or fund managers or individuals. If you're getting concerned about risks and volatility in global markets, you can buy the VIX as an insurance policy or a hedging tool. And as you can see, there have been periods where the VIX has spiked because people have bought this insurance through various periods of uncertainty. Even in fact, when President Trump won the election in November 2016, we saw a spike. But interestingly enough, the market suddenly woke up to the fact that a Trump presidency was going to be a pro-growth presidency. So he was going to basically cut taxes, cut red tape, invest in infrastructure. And you can see the VIX index basically remained very, very low, with very low volatility and a complacent period of 18 months. And so financial markets did pretty well through that period. The orange line is the S&P 500. That's the leading index in the United States of the top 500 companies. And as you can see, significant outperformance. And part of that outperformance is not only the fact that everyone liked the growth policies from President Trump's administration, it was also the fact that US corporate or corporate America is in very good shape. Balance sheets are in great shape. They've cut costs. Almost every component of the US economy is doing very well. And earnings growth, which is the main driver of stock market valuation, by the way, has been very, very strong. In fact, in the last quarter, US companies on average grew by 10 to 12% in earnings terms. Just to put that in perspective, the current reporting season we've got in Australia, we're barely going to get 2%. So no wonder monies or capital is moving to the US share markets chasing growth rather than here in Australia. So what about Australia through this period? Well, one of the best indicators we can use is the NAB Business Confidence Survey and the Westpac Consumer Confidence Survey. And these two surveys pretty much have been aligned since the end of the mining investment boom. As you can see, the grey line, which is the business survey, basically has been holding up okay. But it's really been holding up because of within the survey, the conditions component. So businesses that have been surveyed, of which there's about 560 of those businesses surveyed, have been saying conditions are okay. Not fantastic, but okay. But they haven't had the confidence to invest. And this is the biggest difference between the Australian economy where we stand today and the US economy. We haven't had business investment. In fact, since the end of the mining investment boom, we've not had one single key sector pick up capital expenditure or business investment that's driven activity and in particular driven a stronger labour market and has not driven wages growth. And it's this wages growth story that is absolutely critical to our economy. And that's very much been reflective in the orange line, the consumer confidence numbers. As you can see, back in 2014, consumer confidence plunged. That was largely a reflection of the end of the mining investment boom, where those high-paying mining jobs were no longer available. A lot of those families and households had to move to the East Coast and accept lower-paying jobs, largely in the service industry. And consumer confidence largely has not recovered up until a couple of years ago, where we did see some pickup in employment, which was clearly good news. Unemployment at that point in time fell from 6.3 to 5.2%. Then fast forward to a year ago, when we started having the electioneering for the federal election. And of course, the big difference between policies between the Labor opposition and the coalition government was such that we saw both business confidence and consumer confidence decline. And although we've seen the latest Westpac Consumer Survey had a very modest pick-up, despite the fact that we've had a coalition come back to power and those negative policies from the Labor government, particularly around housing and negative gearing, have been abated, we haven't seen a kick-up in confidence, either by business or by consumers. And in fact, I've got a chart on business conditions for Queensland, and it's not a great picture. So let me quickly run through, in summary, where we see global growth. Currently, these are Macquarie's, all of these numbers you see are Macquarie's forecast, by the way. So we're forecasting growth for this year at 2.5%. That's now considered well below the long-term trend of 3%. So growth is positive, but growth is slowing. And I think you can see some of the evidence from those PMIs on that. I've talked enough about China, but the Chinese National People's Congress has basically set the authorities a range to manage their economy. That's between 6 and 6.5%. And growth used to be 8%. So as this economy continues to mature, yes, growth is slowing. But there's absolutely no doubt that with the new stimulatory package about to be embarked on in this coming quarter, we think that 6% will be intact for the Chinese economy going forward. The US, well, it's been tracking probably closer to 3%. We're a little bit more subdued about our forecast at 2.5%. We think that things are starting to slow down a little bit. It's very hard for businesses just to keep employing. Unemployment, by the way, has gone from 11% at the worst of the GFC to 3.7%. So a significant employment drive over the last number of years. That's basically given households some security around work, and wages have been going up modestly. So retail sales have gone particularly well. Housing has recovered. So the US looks okay at 2.5%, but it's not running at optimal levels that we would normally like to see. And of course, President Trump is pushing the central bank and trying to push policies that will get that growth up and going. Europe's a completely different story, and I haven't really touched much on Europe up until now. The best we've seen for European growth was 1.8% post-GFC, and they've not really been able to get past that. Germany is the main driver of growth. It's 43% of the EU's economic activity. And unfortunately now, having seen Germany do really, really well, things are very much slowing in Germany. In fact, overnight, manufacturing PMIs and indicators are certainly suggesting that manufacturing activity is starting to slow as well. And it may well be that Europe is the first geographic region that actually turns into a negative or into a recession. A couple of interesting things on Europe, for what it's worth. We're seeing a political change taking place in Germany. That means potentially the political instability and maybe political or policy change as well. And there's a couple of pieces of anecdotal evidence I thought I'd mention to you, which I thought was quite interesting. You may remember there was an emissions scandal a couple of years ago out of Europe. And of course, auto manufacturing is a very large part of the German economy. So automakers are now having to retool their production. There's also been a shift away from the use of diesel towards petrol and of course hybrid cars as well. So that retooling is having a few hiccups. So anybody in the room who's about to order a custom-made European car, you're going to probably find that the order is going to take 6 to 9 months. Anybody in the room, by the way, planning a European holiday from here? Anybody? Hands up. Anybody going overseas? Couple? Sir, are you by any chance taking a lovely boat down the Rhine River? No. That's a great decision because there's no water in the Rhine and your boat trip would be a bus trip. The importance of that is that Europe uses its waterways to move goods. And at the moment, there is a drought. There's been a 2-year drought in Europe, and all of the waterways are well down. Go and Google Rhine River. You'll be astounded to see the banks are bare. And this is having an impact on economic activity because they're having to find substitute means of transport across road and rail that the waterways can't handle. So this too is having an impact. Now, these are one-offs. The emissions scandal will get resolved. Eventually, there'll be rain in Europe, but it's having an impact right now for Europe. And of course, then there's Brexit. What a mess. 3 years of just getting nothing done. And it does look like, or seem to me, that Boris Johnson, although he is saying he wants to get a deal done before the 31st of October, it almost seems to me that he recognises that there will be no deal. And they will exit on the 31st of October, should I say, with no deal. What does that mean? Well, all trade between the UK and anybody else reverts back to WTO, that's World Trade Organisation rules. Not a disaster, but not great either. It may well be that President Trump decides to do a quote-unquote tremendous deal with the UK and try and support UK trade a bit more. There's absolutely no doubt that we've got Australian trade delegates over in the UK right now, as does New Zealand, because that's going to be to our advantage. You know, finally we're going to be able to export our Tasmanian apples and our lamb and a whole bunch of other services into the UK over time. But it does mean that confidence in the UK, and hence Europe, is going to continue to be to wax and wane. And there's absolutely no doubt, no matter which way you cut it, Europe needs the UK as much as the UK needs Europe for trade. The auto sector in Germany exports 15% of its vehicles into the UK. That's really important. So it's a disaster from a time frame, but eventually this thing will get resolved. And then there's Australia. Well, currently the Reserve Bank has got a growth rate of about 2.5% forecast for Australia. We're not as positive. Our growth forecast for this year is 2%, and currently the last growth rate number was actually 1.8. And why are we concerned about Australia? Well, it's this whole story about the lack of business growth through business investment. And although the labour market is tightening up a little bit, which is good news, unemployment at 5.2% still means that we've got excess capacity in our labour market. In other words, there are some demands for jobs, but not to the point where wages can go up. And without wages going up, households aren't spending. And why is that important? Well, it's 45% of our economy important. I'm going to take you through a few charts on that. And I always like to finish this slide on a slightly more positive note, and that's India. Growing at 7%. It's the fastest G20 economy growing. There are two reasons why we like the outlook for India. One is population growth and the demographics. The Economist magazine forecasts that India will have more people in 2025 than China. The big difference is that China's got an ageing population through its one-child policy. India's got a very young aspirational population. So much so that when you look at the number of Indian workers, they've got 27 years of more productivity than the Chinese workers do. And there's absolutely no doubt that India is where China was 20 years ago. So the per capita GDP in India is $2,000 a head. China's now 8. So we do think that population growth and that demand for a better standard of living is going to be a big driver. How are they going to do it? Well, they can only do it when you've got a pro-growth government. And Narendra Modi has just won a second term with a large mandate. This is going to be his second 5-year period, of which he is restructuring the Indian economy. Things like tax reform, really, really good example. But don't get me wrong, the growth rate sounds pretty good, and it is, but doing business in India is pretty tough. And certainly there's a very large bureaucratic component in India, bureaucratic structure, should I say, in India. Here's one very good example. The tax reform they put in place. In November 2016, the Indian Parliament passed a GST, great tax reform, got rid of 29 provincial taxes and put in place a national GST. The trouble is that legislation was in front of the Indian Parliament for 20 years. So what about Australia? Well, one of the things that we are concerned about, although it does look like that maybe the housing market is now going through a bottoming process, but there's a very clear correlation between consumer spending and house prices. And as you can see, we've seen a significant fall in house prices, on average about 12% across the eastern states. But it does have a detrimental impact on discretionary spending. So seeing if we're right about a bottoming in the housing market in broad terms, that should start seeing a bit of confidence returning to consumer spending at some stage. But the wages piece has to also kick in as well for Australian households to be feeling comfortable to start that spending side. So this is really important. And that property cycle is also very important. And of course, when we talk about property and house prices, that's only existing houses. We're still in a downturn in housing construction. So residential construction still probably got another 12 months to go before we start seeing building approvals picking up, before we start seeing housing finance approvals picking up, and before we actually start seeing new housing starts picking up as well. So this is going to extend this cycle of weaker Australian growth going forward. And that's come up in our latest GDP numbers. For the last 3 quarters, in fact nearly 4 quarters, we've seen the Australian growth rate deteriorate. Now the last quarter came in at 0.4 of 1%. The previous quarter was just 0.2 of 1% growth. And in both those quarters, the key driver of growth was public spending. That's government spending. So it's running the country on a day-to-day basis, and a big component of that is, of course, infrastructure spending that we've seen. But there's been no other key component in our economy that has been contributing to positive growth, and that is a worry. So what has the central bank been doing? Well, as you can gauge post the mining investment boom, when the big demand on labour and wages started to slow down, you can see that inflation dropped below that band by which the Reserve Bank tries to manage inflation. That band is 2 to 3%. If the Reserve Bank can manage inflation around 2 to 3%, you get reasonable economic growth, reasonable business investment growth, reasonable labour growth, and of course wages growth. And that's the cycle we want. Unfortunately, inflation dropped to 1.5% back in August 2016. The Reserve Bank cut rates from 2% to 1.5% in 2 cuts, and inflation has remained well below 2% ever since. In fact, the last number was 1.6. Now that's a big fall in inflation terms, and a lot of that is to do with this wages growth story. So no wonder after 33 months of keeping interest rates stable at 1.5% and not getting the traction they wanted, the Reserve Bank was forced to cut and stimulate again because inflation is not picking up. And the question mark is, how much more stimulation does the Australian economy need? Well, it needs more. But the Reserve Bank, in fact central banks around the world, including our own, has been calling on governments, both state and federal, to be adding into the picture because the central banks can't do all the heavy lifting themselves. Now, we think the Reserve Bank is going to remain on hold for a number of months now and wait to see if the latest cuts get a bit of a contraction. The correlation with that, of course, is the fact that we've had the election is now gone, is finished, so the confidence around, or the confidence erosion around the election is gone. The 2 interest rate cuts have helped a little bit, and of course we have seen the regulators starting to modestly ease the way that banks can lend, particularly around serviceability calculations. So those 3 elements might be a little more positive, and that's maybe why the banking sector might start to be, the housing sector might be starting to bottoming out. But that alone is not going to drive our economy. Business investment and some vision in policy and planning is exactly what we're needing, and currently is definitely missing. So, where are we on housing? Well, we've seen a sugar hit. As you can see, big decline in the eastern seaboard cities of Brisbane, Sydney and Melbourne. and also a big rebound. Now, of course, that might be some pent-up demand on a pre-election basis. I don't think we'd be seeing the same chart had the Labor Party got in on their policies of negative gearing and the other impacts in regards to capital gains as well. Having said that, this probably is not something we can rely on. Auction clearance rates have certainly improved, but it's on very low volume. So what really is going to be the acid test for us from a data perspective is actually to see the spring selling season, to see in fact if prices hold up and demand starts to pick up. I can certainly give you some anecdotal evidence that from a Macquarie perspective, our mortgage lending business has seen a significant lift in applications since the election, and in particular since the cut of interest rates. So again, that might be some anecdotal evidence that housing may be going through a bottoming process. We're not about to start a housing boom again, that's for sure, but there's definitely signs that that's starting to recover. And the interesting thing is that what we're seeing is that and that's Sydney's clearance rates, but if I showed you the chart for every capital city, it too has been the same. So clearly we're seeing some pickup in demand. But the key thing is around what the banks do and lending. And this chart shows two things. First, you can see the black chart, or the black line, has seen that modest pickup in house prices. That's good news. But the red line is credit growth, that is lending volumes by the banks. And you can see we saw at the peak of the market, lending volumes were running about 5% growth. It dropped to 3.5%. That's a really big fall in credit growth. And so what we do need to see is more lending taking place, both at the business banking level and at the personal mortgage level. So hopefully we're going to start seeing that turn around. So what about Queensland? How is it faring? Well, the good news for Queensland is that we're seeing all the major mining companies over the last couple of years have picked up their intentions on business investment, that's capital expenditure, and they're actually following through with actually spending more money. So if you look at seek.com job ads, the mining sector is the one that really stands out in terms of job vacancies. So that's great news for Queensland and in particular also for WA. As a result, those capex expenditures are certainly seeing a turnaround. Now the energy sector or the gas sector is on a slightly different, much longer cycle, but there is definitely some investment taking place there as well. So that's clearly good news for a state like Queensland. Of course, with that, if there are new jobs available in Queensland in the mining sector as there are in WA, to be tracking where people move for jobs is really interesting. And as you can see, for quite some time, you've had a positive migratory impact. More people coming to Queensland for jobs and probably, as Madonna said, the wonderful lifestyle. But also there's an element of the fact that certainly Queensland is the cheapest or most affordable place to live on the eastern seaboard. Certainly well below that of Sydney and Melbourne. So the combination of some new jobs in a sector, the potential of wages at least bottoming out, as you can see their wages are bottoming out, and the fact that Brisbane and parts of Queensland are the most affordable, that makes for a reasonably good outlook potentially anyway. But of course the wages growth story is critical. And unfortunately you're still seeing the private sector wages growth not kicking up, and the only part of the Queensland economy that is driven by the Queensland government employing more people, and they're paying them more money. So that does give some support to consumer activity, but it's not the broad brush that we want to see. And the negative for Queensland is that business conditions are declining, and that's not good news. So despite you might have a bottoming of the bottoming of the housing market, you have one sector that's an important sector potentially employing more people, but broadly speaking outside of that, business is not that comfortable about the operating environment, and it makes some sense. Construction activity is down 20% in the last 18 months. Retail sales are down across the country, including Queensland. We know how tough retail is doing it. And as a result of which, with a low wages growth story, this doesn't add up to great conditions for the Queensland economy. So as you can see, that in fact, that it's not all positive. There are some concerns there for the Queensland economy. Then there's the Queensland government. As you can see, the key governments of New South Wales, Victoria, Queensland, South Australia, they're spending money. The debt is rising. The question is, what are they spending it on? And unfortunately in Queensland, in my view, they're not spending it on the right things. They're expanding the public service, creating jobs, but they're not investing. In fact, the Queensland government currently has no specific policy in regards to asset recycling. What's asset recycling? Well, it's absolutely key in our view to the expansion of infrastructure spending. Because at the end of the day, what will drive growth is not only just population growth, which you're getting, migratory growth is pretty good, but you need to support that growing population with additional infrastructure. Now, the forecast for population in Brisbane by 2056 is about 6 million people. Hands up anybody who thinks that Brisbane's got enough infrastructure to handle 6 million people. Anyone? Funny, not a single hand. It's the same across the country. It's not just Queensland. I'm not having a go at Queensland at all. This is a story, a big picture story about infrastructure. And what we need to see is governments coming to the party in regards to finance of infrastructure. We need to call on the private sector to help finance as well. We need to sell some public assets so state governments have got the money to invest in infrastructure. And we're not just talking about road and rail here. We're talking about generation capacity, we're talking about water, we're talking about healthcare, we're talking about education. These are key critical infrastructure strategies that are required. And of course the other side of that is we need policy. We need governments to have sensible plans, not an election cycle vision, but a 30-year vision. And it's something that we don't have in Australia generally. So is winter coming? Well, you wouldn't think so on a day like today. What a fabulous day to be in Queensland, 24 degrees. We don't think that we're heading towards a deep recession. It's possible around the world that the growth is slowing to the extent by which we think we might see a recession in 15 months' time, but there's absolutely no doubt that central banks are working very hard to avoid that outcome. So potentially only a very shallow recession if it were to occur, and it may only be, in fact, Europe. It doesn't look like the United States is close just yet. So things are on the verge of a very critical time for the world, and we definitely want to see the trade negotiations come up with some degree of agreement going forward. The longer it goes on, the worse the economic outcome is going to be for the world and for Australia. Now, in a room of this size, there's bound to be a couple of lawyers. Can the lawyers put their hands up, please? Any lawyers prepared? An honest lawyer, thank you very much. I just put this up to remind you that, to remind me to say, please take all the information I've delivered to you this afternoon as general advice. It's not specific to your own goals, needs and objectives in regards to your future wealth management. But of course, if you're interested in wealth management, what would a Macquarie presentation be without a Macquarie ad? And you might have seen this ad in the AFR. We've transformed our wealth business to a private bank business. And some of you may be Macquarie clients. I know we've got a great relationship with BDO at our business banking level. But within banking financial services, we've got business banking, personal banking and wealth, which is where I come from. We've just spent $250 million on a digital banking platform. So if you're interested to become or just have a look at the information available, please go online. There's no toll-free number. It's a digital banking platform. Have a look. I'm sure you'll navigate and find some really interesting information. And although I'm not going to take questions right now, there is going to be a panel of some fantastic experts that you can throw your questions on. So thank you for your time. Thank you for listening, and I hope you got something out of that.
We sure did. Thank you so much, Martin, and we look forward to pursuing some of those issues. Please take a seat. And we'll introduce the rest of our panel this afternoon, and it is a stellar group of individuals. If you can come up when I introduce you, Heidi Cooper, who is a member of the Jobs Queensland Board and adjunct professor at the University of Queensland and has served as Head of Government and Corporate Affairs at Origin Energy. Heidi has significant experience in the areas of government, corporate affairs, public policy, stakeholder management, human resources, law and diversity. Interestingly, she's also undertaking a PhD researching the repair of public trust in major institutions. Philip Di Bella is Executive Chair of the Di Bella Group, and his success started with him seeing a gap in the coffee market. It grew quickly from a startup to the largest of its kind in the nation. He sold that company to Retail Food Group, but remains an ambassador and significant consultant. An adjunct professor at Griffith, I also love that he became the world's youngest recipient of an Italian knighthood for his contribution to the Italian community. Sir Phil, welcome. Chris Mountford is Queensland Executive Director at the Queensland Property Council, the nation's leading advocate for the $670 billion property industry. And prior to that, Chris held roles with the Civil Contractors Federation and the LGAQ. And last but certainly not least, Priscilla Radice is CEO of the Infrastructure Association of Queensland, and certainly that issue is important to our discussions, isn't it? Priscilla brings an expertise in history in leading complex transformational change, and she was previously principal of a global professional design firm specialising in infrastructure and cities. Ladies and gentlemen, please welcome our panel. Just briefly, Martin, before I go to others, given your global outlook, how much should we fear winter in Queensland? You mentioned the business conditions declining. What are the factors here, and can you be a little bit more specific about your outlook for Queensland?
Well, the first question is, does winter ever really come into Queensland? Probably not. It's a fabulous place. I think what I ended my presentation on is actually key, and it's relevant for the whole country, but in particular for Queensland as well. And that is that I think businesses and government get too caught up on short-term issues and aren't thinking about the bigger future, planning for the future. Whether it's expanding your business, whether it's succession planning, whether it's expenditure on a new front-end system or a back-end system, a new marketing plan, whatever those innovative components of a business that are absolutely critical. I think that businesses around Australia, including here in Queensland, are not focusing enough on that. I'll say one very quick thing and then I'll pass it on. Australia's got the biggest, or the second biggest, usage of smartphones. So we love this stuff, don't we? You walk the streets and everyone's onto this. So we're a big user of that technology. And yet from a business perspective, we're not even in the top 20% in the world in terms of using technology. And businesses are yet to change their behaviours in regards to business planning and growth using that technology. I don't understand why. Because as a business owner, individual, you're onto this all day. You're not using the same for your business. And when you think about productivity and growth opportunities by using what's in the cloud and on the net, and there's a fabulous thing called Google, if anybody hasn't heard of it, that's what we should be doing. Thinking of planning, thinking of growth, and thinking beyond an electoral cycle or a one-year business plan.
Thank you. Phil, can I go to you? Someone once told me red lipstick and coffee are the best barometers of confidence. What are you seeing in the economy from what you heard Martin explain?
Well, I don't wear red lipstick, thank God, and I certainly drink a fair bit of coffee. But look, coffee's often a great barometer because when we normally see 2.5 cups per person per day being drunk in a coffee shop, we're now seeing it at about 1.5 cups. And the constant, and one thing I keep talking about when we're doing business, is what's the constant going to be in the next 5 and 10 years? So that'll part answer your question. When we talk about, Martin, what barometer should we be looking at is what's the constant going to be in the next 5 and 10 years? And the constant for us is that people are always going to drink coffee. However, the way that they're going to drink coffee is going to change. And I don't care if you replace that coffee with finance or buying property or whatever service and business you're in, it's always going to be what's the constant going to be in 5 and 10. So when it comes to coffee, we know that the economy affects how people are going to spend, and pretty simply put, they want more for less. So when most of you in this room would never have touched the office coffee machine 3 or 5 years ago, you're probably now finding you are touching the coffee in the office, even though it might not be of a good standard of your favourite barista downstairs, but it's the opportunity to save $4. So what we're seeing is what used to be 2.5 coffees per person in a cafe is now down to 1 or 1.5. So you're still drinking coffee, but you're happy to take a lower quality coffee if it means saving money, and thus why the rise of the $1 coffee at 7-Eleven.
What are your customers telling you?
Well, business confidence. It's all about business confidence. And Martin, that was a great presentation, but to me, a lot of what we're doing is looking in the rear vision mirror and not looking at the future. And the customers seem to look in the rear vision mirror, and what we do as a company is bring them to the future, and that is, what's your problem going to be? As an organisation, if I'd started a coffee company, I would have gone broke. There was 1,500 companies you could have bought coffee from in 2002. What we did is shift something away from a product business to a service business. More importantly, what we did is we said, what problem can we solve? And it's the same ethos that we use today, and we're about to embark on the strategy for 2020. And that is exactly what's in play right now, is what problem can we solve for cafe owners next year and beyond? And I think that's exactly what most businesses that are going to be successful tomorrow are going to do. So that's what people are telling us. These are our problems. This is what we want you to do.
You mentioned property, so can I go to you, Chris, about how you read what you see? And specifically, I loved you to address whether you've seen any impact yet of the state government's decision to increase land tax required of foreign entities.
So I think the way we look at this sometimes is sort of a difference between a cyclical lens and a structural lens. So certainly at a cyclical level, we're seeing, what was coming through in Martin's slides around that downturn in dwelling construction and forward workbook and that kind of thing. But structurally, what we see, particularly here in South East Queensland, and a lot of our major listed entities talk about this, is strength. So things like duplicating the runway, like Queen's Wharf, like the Port of Brisbane expansion, those sort of things are structurally important for South East Queensland, as is our relative affordability to southern markets. So there is a structural strength there around property. You touched on the fact that the Queensland government's decided to double land tax for foreign entities. So if I could give you an example around the risk of that we see, linking back maybe to Martin's presentation. So Martin had a slide there that Chinese CEOs are really pivoting towards Australia as an opportunity, which I think was something that was really quite interesting. And we're seeing that a little bit early days in terms of some of what our members are telling us. So for industrial property, so the big sheds we all drive past on the freeway, we're seeing a significant amount of interest coming out of China for potentially investing in industrial property in Australia. It's sort of as a sense that Australia might be the Switzerland of a trade war, and so manufacturing or other things out of Australia may make sense. Yeah. When you do the numbers on that, there's really only two places to do that: South East Queensland or Melbourne, because of the access to the port, the cost of the land, and a whole range of other things. But a doubling of the land tax on foreign entities effectively means that the choice is Melbourne. You wouldn't do it here.
Have you seen an impact?
Yeah, we've certainly seen transactions slow and some transactions fall through, and certainly a number of people saying that they're concerned about investing in Queensland because literally their tax will double.
Okay, so can I jump here to you, Priscilla? And Chris just mentioned investment in Queensland. The big imbroglio that has dominated debate has been Adani, right? And it became an issue about climate change, not jobs or anything else, as many of our national conversations have. How much do you think how that was dealt with has knocked confidence in this state?
A lot. It really focuses in on the big issue between the political atmosphere of our infrastructure. So it became a political football and it became an either or. So it was this hugely black and white issue and it was neither. And it has knocked confidence. I think it played out very clearly during the election campaign when something that had taken a long, long time to make a decision was made very, very quickly. And when we talk about business confidence, you need certainty. So if there isn't certainty in the policy settings and there isn't certainty with the pipeline of work and there isn't certainty that there's going to be support for those types of expansions, then business doesn't have the confidence to invest. And you need transparency. Both sides of government, you mentioned Martin, it's not just the Labor government, both sides of government in Queensland have said they're not going to do asset recycling. And that decision has meant that the electricity market has moved and those assets aren't worth what they were when we could have sold them. So the opportunity to bring in private investment, and I've heard Treasury say to me, we need private sector to do the heavy lifting. The private sector can't do the heavy lifting unless the policy settings are in place where you have an appropriate share of risk returns over the long term.
Okay, I'm going to come back to that, both the narrative around asset sales, I guess, and that infrastructure question. But Heidi, can I bring you in here? What about energy? How do you think we move to a more sustainable energy while not surrendering our coal revenues?
Yeah, well, I think Priscilla touched on some of the political issues that we've seen in these sectors recently. And the reality is that the resource sector last year brought in $62.9 billion and had over 316,000 jobs. Over the last 9 years, it's contributed to Queensland almost $600 billion. So rightly so, this is a significant pillar in our economy, but also in our society from a jobs perspective. So what does climate and energy look like going forward? Well, right now it's really, really messy, and that's the technical term that I'll use to describe what's going on. And I think we've got a real short-term issue about how it is that we're going to move some of this policy forward. I am optimistic that in the midterm we will start to see some leadership from government, but also from business as well, about the areas that they think that they can start to make a transitional and structural change. And I think long-term Queensland is really well positioned. But to answer your question, Madonna, about what it is that we need to do to really shift this, I think there's three elements to it. The first is we need a long-term evidence-based policy which looks at what we need in Queensland and in Australia, but also considers our international commitments as well. We need to really foster Queensland's energy mix. We are an energy-rich country, but also state as well. We've got coal, we've got gas, we've got sun, we've got wind, we've got everything we could possibly need, and we need the jobs that go with that as well. And finally, and most importantly, we must have community support, because we will not transition this issue unless we work with our communities.
And there is a big community support for business to embrace this. Martin, are corporates responding to the challenge of climate change sufficiently, in your view?
Probably not sufficiently, but they're starting to respond. So if you look at an annual report by most companies, they'll often list safety as number one for their businesses and their stakeholders, and now clearly they're addressing what their carbon footprint is doing and what they're doing about it. But in terms of juggling both the expectations of other stakeholders, profitability obviously is a part of that as well. The pace of that change is definitely slow, but it's now becoming more front of mind of boards around the country, and that's certainly important and the starting place. Can we do more? Well, I would say probably, but are we going to be able to do more in a short period of time? I doubt it.
Priscilla, let's talk about investment in infrastructure and how you're going to deal with that 600 million people moving to Brisbane. When we talked offline, you lamented the lack of structures that encourage private investment. What does private industry need to invest? Is it in terms of return, stability, what?
Both of those. So the certainty of pipeline. Not all of the infrastructure is suitable for private investment. We have the need for social infrastructure. It can't always be about patronage and immediate double-digit returns. So there's a maturity from industry around what the return looks like over the long term, and there's a requirement for government to look at what that vision is for the long term. So here in South East Queensland, I was at a roundtable yesterday with the federal, state and local councils talking about the city deal. Now, the city deal is it's not a panacea, but it is certainly a transformative model that can bring collaboration at all three levels of government. Infrastructure Australia's audit released last week clearly shows that one of our biggest impediments to infrastructure delivery and reform is the lack of government coordination and collaboration. And that impacts industry. If you're not sure what the policy settings are going to be, and if you think an infrastructure project's going to become a political football between cycles, you can't invest, you can't step up.
So these city deals, Chris, are they the panacea from your point of view?
Yeah, look, we're big supporters of that, because it's all about alignment. So we want the three levels of government to align behind the strategy for a geographic area being South East Queensland. So to take that point one step further, you know, the mayors have put forward, or South East Queensland mayors have put forward an idea of fast rail across South East Queensland, which would be a game changer and really set the region up for decades to come. In other parts of the world, that would be a project that would be privately delivered. There's no real reason to think it wouldn't be privately delivered here.
There are private interests wanting to deliver it.
I was just going to say, there are private interests that want to deliver it, but our preparedness to accept private financing, both in particular from offshore, I think that needs to change. Now, it's not all about finance. It's clearly around the policy component and planning as well. But Australia's a great place to invest. We're a AAA-rated sovereign country, so we're viewed as low risk. Foreign investors like the big sovereign debt funds, like Abu Dhabi Investment Authority, just to name one, the big pension funds out of Canada and out of the United States and the UK, they love investing in Australia. So there is money to be had. So the finance side is actually not the issue. It's the preparedness to accept where that money is coming from. In other words, are we prepared to sell some of our assets to foreigners in return for funds that is going to continue to help us grow new infrastructure assets? I think that's one of the big issues, isn't it?
It is one of the big issues. We did some research, and we actually partnered with the Property Council a few years ago that really talked to the community about, you know, how do you want to see infrastructure being funded if you look at these different ranges of opportunities. And asset recycling was completely and utterly misunderstood by the vast majority of people. So when politicians say that they won and lost an election on asset recycling, I just don't agree that that's the case. When you actually talk to a community about the benefits of there's a time and a place, right asset, right time, right price, and then you reinvest back into other assets that aren't commercially mature yet, they all say yes, and that's a very good response.
Chris, do you want to just jump in here too?
Yeah, look, absolutely agree. I think the language, what we learned through that project was that the language around this really matters, and how you describe it and how you describe the benefits really matters. So, talking about assets that deliver the last wave of growth and needing to invest in the next wave of growth is actually where we need to get to, and being clear about what those investments are and where the money goes.
Phil, I know you well enough to think you probably have a contrary view here. I mean, we're waiting on governments, and in Queensland, both sides will not support asset sales, and you have voters who will not accept it. Isn't it up to people in this room, like Adani, to change the narrative?
Yeah. So, as someone who does, most of you might not know, I do a lot of advising to local, state and federal politicians, and most of the time I'm telling them to pull their heads in, as you can imagine. But it's all about the narrative. It's all about the communication, and simply putting, the narrative's based on the wrong parameters. And what I mean by that is it's a popularity competition. Yeah. It really is propaganda.
So how would you win this?
Well, it's all about the art of telling a story so compelling that it engages people. And that's how simple it is. And it doesn't matter whether it's politics, whether it's, we're talking infrastructure, whether we're talking coffee, whether we're talking accounting services. If you can tell a story so compelling that it engages people to choose you, then you're going to win.
So Heidi or Martin, New South Wales did that, didn't it? They explained where the money would actually be spent so people could see where their money was going.
Yeah, so I think the narrative is absolutely critical in this situation. But I'd also go to the point that this isn't just an economic discussion. At the end of the day, people are human beings. And so we need to get to have a discussion about hearts and minds. And that's the only time we're going to be able to shift people's opinions on things or take them on a journey around a story. So I think that business as a whole has really needed to think about how it is that it presents information about its business. Now, whether we're talking about asset sales, whether we're talking about the Adani project, or whether we're just talking about the businesses of people in this room, what we need to see in a shift from a narrative perspective is how it is that we articulate to people what the benefits are to them. And we know that that's something that's missing in the business community narrative at this point in time. When we can do that, when we can start to show that we are business and we are here for the people that we serve, but also the communities that we operate in, that's when we'll start to see a shift. And what we will also see is it'll enable us as businesses to be able to operate more effectively, but public policy will develop in a much more effective way because we won't have these binary, demonised conversations because the community's on board.
I want to go to some of your questions shortly too. So can I just go to some other industries quickly first? Martin, agriculture. A fertile state, wide variety of crops, potential food bowl for the fastest growing region of the world. Can we deliver that, or what is getting in the way of us doing that?
I think it's one of the big travesties for Australia that we haven't thought about where we place our water. This is just a personal view, but I would love to see a plan to build a pipeline coming from the Northern Territory, refloat the Murray-Darling Basin and create a food bowl, because China would love that. The rest of Asia would love, from a food security perspective, we could do that. Instead, we haven't done that, and China's putting their own food bowl in Africa. So we're missing an opportunity, and we can add great value. And not only just the Murray-Darling, here in Queensland, quite clearly. So again, to me, that's that same narrative, for want of a better word, around the lack of vision. Because who's to say that we couldn't spend $60 to $100 billion on a pipeline, get the Chinese to part fund it, give them supply of food, gives us lots of jobs. I mean, there's all those positive things around it, but we're not doing it.
No, and water is a huge issue, but is it about a pipeline? Is it a matter of building dams? Or why don't we just turn on the recycling grid?
Well, any of that, but that still requires planning and investment. For those who've travelled overseas, when you're in London, drinking the water in London, it's basically gone through 10 or 12 bodies. It's fully recycled water. It's a terrible thought, isn't it? Now, we don't need that here in
You've won everyone over.
Yeah, exactly. So the tourism into the UK from Australia is about to decline dramatically. But more importantly, there is technology to support this, wastewater. So you're absolutely right. How we deliver it, whether it's a pipeline or open trenches, I don't know. But what I'm saying is there's plenty of water in the Northern Territory and we're not utilising it.
Phil, tourism, you're on the tourism board formerly.
Firstly, I'm glad we're not doing business in London because 92% of an espresso is water, so Jesus. But tourism, I used to be on the board of Queensland Tourism and Events.
Yeah, so wait for my question.
Yes.
So what about, how much should we be worried about the reef? We've got to honour our obligation there to preserve it for future generations, but we need to open it up to the world in terms of tourism too, don't we?
Yeah, look, it's always a sensitive topic, right? And because I was on the board of Queensland Tourism and Events, we always talked about it. And simply put, to use an analogy, it's like having a cow in the paddock, but you're not going to milk it. You want to milk it and get what you can from it, but you don't want to over milk it and kill it. Yeah. So we've got an amazing asset there in the Whitsundays and the Great Barrier Reef. Why would you let it sit there and sit dormant? It'd be like having an amazing tool or resource in your business and not using it. But yet, if you overuse it, you're going to overexpose it. So the key word that we always talked about, and my personal view, is sustainability. It's no different in coffee, right? Like 98% of the world drinks coffee, but there's only 45 countries that actually manufacture coffee. So it's a very like-for-like scenario, which is you want everyone to drink coffee, but you've also got to make sure that you do it sustainably, meaning that we've got to source coffee sustainably. So the question and my solution always came back to the Great Barrier Reef, and Whitsundays being, and it doesn't matter if it's that region or another, just do it sustainably. So,
Chris, what are you thinking right now? Be honest.
92% of coffee of an espresso is water.
I'm sorry, I brought that up. $4 for his coffee.
Yeah, and I think all of these things line up. So if we're talking about a tourism story, it's an investment story and how we invest in the assets that deliver that and how we attract that investment and leverage it and then tell that story. So, none of these things sit there individually by themselves. We need to be able to connect the reef via good infrastructure so that people want to come. When they come, they need to stay in great accommodation that needs to be built for them and all of those sort of things. So sometimes, when we talk about individual sectors, I don't necessarily think we're thinking about the connectivity and how those things actually line up together.
You're quite optimistic with that slide about the Chinese CEOs, aren't you?
Oh, look, I think, what we see increasingly through our membership is capital is really mobile.
Yeah.
Really, and more mobile than it's ever been before. And so you need to look at those opportunities and think about how to attract that level of investment and how you might leverage it for your local region. So take education as an example. We've really ramped up our ability to sell education effectively as a product overseas. What we haven't ramped up is how then to leverage that to grow, to encourage those students to stay or to encourage them to invest here or encourage them to establish a business here. And so how you take that next step off the back of that investment is important too.
And Martin, education is so important to this state and our into Asia, but this week there's been all sorts of warnings that it's vulnerable to Chinese whim. Is that not right?
I actually don't know how to answer that one. I tend to look at things on a more big picture. And there's absolutely no doubt that as India and China continues to develop and mature from an economic perspective, the demand on good education is going to continue to grow. Yeah. So that big picture view is that we've got a fabulous resource in our education resources right across Australia. And clearly Queensland has done it exceedingly well and probably punching above its weight in that respect. So that's a great export for us, there's no doubt. So I'm not sure it's at the whim of the Chinese and the influence of the Chinese at this point in time. I think there's a bigger picture than that.
Do you think we're developing the right export industries or vainly hanging on to the old?
Well, clearly we've not been able to compete at a manufacturing level for Australia. So, the auto industry has declined and other manufacturing sectors, unfortunately, we can't compete with Asia. So where we've picked up is clearly picked up on the services component. And we do services really well. It's nearly 70% of the entire economy. So I think that's an area that we should be continuing to promote and invest in, absolutely. Healthcare is another one. But it's not, there's financial services, there's legal services. We've got some great brains, which unfortunately we lose at a technology level to the United States. It would be great if we could develop a tech component here in Australia as well, with some serious investment. I think that's something that we should be thinking about the future, and that's part of the vision that we don't have. So I think there's plenty more industries we can develop here that are still very much fledgling. To give you an example, the Australian stock market has an IT or a tech segment, and it's less than 0.5% of the total value of the stock market. It's minuscule. So again, they're areas that I think we can really concentrate on in developing, and we can do really well in them.
Heidi, your level of optimism going forward?
My level of optimism. Well, when you started talking this afternoon, Madonna, I was really optimistic. I think Brisbane and Queensland sounds great. And then I thought winter was coming, so I was getting a bit worried about that. And I think that's the point. I think the point actually is that there are so many mixed signals at the moment. And I think what we've got to do is we've got to look for where the opportunities are and where the points of optimism are. Now, we know that whether it's consumers, customers or community, they are making decisions through their household budget at the moment. That's the lens they're using, and that's not just in relation to where they make economic decisions. It's about who they want to spend their money with, what brands they want to have in their household. So there's a real opportunity for business to start thinking about how it looks from a social perspective as well as how it looks from an economic perspective. Another area that I think about as well is from a political perspective. Now, I think we're all in violent agreement that we would love to see political leadership and strong, long-term, certain public policy. Now, that's an absolute must for us moving forward. But we do have an opportunity right now because we have been through a period, as Martin mentioned, of political uncertainty, and it did feel like the campaign went on for a really long time. And what that did is it did impact confidence. We're now in a period where we are going to have some certainty. Now, whether you agree with the government that's in, whether you agree with the policies or not, it is an opportunity for business. It's an opportunity for us to start having some stability that we can work with. And one thing that I think business does need to do is we can't continually just look at government and ask them to come up with all of these public policy ideas. What's really important is that we, as business community, work with government to get some of these really effective long-term public policy positions that we need to progress our state.
I suspect you have a disagreement there, Chris.
How so?
Just the look on your face.
No, I think everything needs to line up collectively. So, the discussion we had yesterday around the city deal is one can't operate really well without the other.
Yeah.
So we do need governments to line up and set a framework that the business sector then has confidence to invest in.
Could the Olympics be a game changer, almost an arbitrary deadline to infrastructure development, either Chris or Priscilla?
I think the answer to that is yes. I think if you look at you go back to the asset leasing discussion, if we were saying to the community, the opportunity here is to host an Olympics and part of that is to deliver the infrastructure to connect the region up to deliver an Olympics, but in order to do that we need to sell the Port of Townsville, is that a legitimate conversation to have? I think what Olympics would do is create that deadline, but you still need, I guess, that something like a city deal to deliver the governance structure in behind it, so that those projects can be delivered to meet that deadline.
Is it a legitimate conversation to have, sell the Port of Townsville and have the Olympics in Brisbane? And how would you go about selling that?
You have to convince the local community that it's a good idea. And we have the Port of Brisbane that was sold, and I was head of strategic projects for the Port of Brisbane, and I can say it's a far better asset run privately than it was government, and I worked on both sides of that. I think you can have those conversations with a community. Newcastle, I've lived in Newcastle, it's a port city. The port is in the city in the same way as it is in Townsville. And it was an easy conversation in Newcastle, which is, it's voted Labor. It's a very blue-collar town because they knew what they were going to get in return. So I think it might be difficult in Townsville to peg it to the Olympics because they might not necessarily see the direct benefit. There might be a different conversation in Townsville, like connecting the national grid for energy to northern Queensland. But fundamentally, if the Olympics is something that can help put a burning kind of platform to that reform around 3 levels of government working together, then it's a useful thing. But our constant's population growth. So we have to deliver, we have to work through what the reprioritisation of our projects is. We are a rail light city. We cannot grow our economy well if we don't get rail into our systems effectively. And across the nation, the only public transport that people will get out of their cars for, generally, is rail. So if the Olympics can help stimulate that conversation, then that's a good thing.
You can join us and ask your question on Slido. It's slido.com, and the details are #BDO Outlook 19. One more question before I go to your questions, and to Heidi. We've seen a marked loss of trust in Australia. Aged care, banks, the church. What do people in this room need to take out of that?
I think it's a really big shift in our society and in our communities. And it's not just in Australia, we're seeing this globally, and we've seen for some time now this downturn in what people are describing as public trust. And we know that all of our major institutions are struggling with it, and you've named just a few of the scandals that are having a major impact on that. Having said that, there is a really optimistic thing that we can look at as well, and that's in some of the most recent research that came out. Most of you would know about the Edelman Trust Barometer. Whilst most of the major institutions sat below 50%, which was putting us in a non-trusting situation, what people said in the general population was that 77% of them trusted their employer. Now, this was a fundamental shift in the data. And what that said is, I don't know who to trust anymore. I'm not sure what's going on. I don't know whether my bank's going to do the right thing. I don't know whether government's telling me the right thing. I don't know whether business has vested interest. But I think I believe in my employer. And so what that means is for businesses is there's a real opportunity to harness that. It's to harness it from an employee perspective. It's also from a customer perspective, because what customers are asking now is they're saying, I want a business that is willing to tell me what they think about something. What do you think about a public policy position? What do you think about a community issue? And in taking that leadership role, not only will businesses have an opportunity to retain employees and customers and have a benefit in the community, but ultimately we may start to see some good shifts in this space.
Thank you. So over to your questions now. Who would like to go first? And if you can just stand up or raise your hand, we have microphones roving the room and we can take it. So our first question over there. Thank you, ma'am. And if we've got a question over here, we can get a microphone to you in readiness. Just raise your hand. Thank you.
Hello, my name's Yaz. I'm from the world's biggest garage sale. We're a profit-for-purpose startup raising capital, and everything you have just said has seriously given me goosebumps. Hearts and minds, social value, the really critical stuff. When people like Richard Branson says the brands that will thrive in the coming years are those that have purpose beyond profit, when will investors who have the funds, many, many millions of dollars worth of funds, actually seriously look at organisations like ours and say, this is worth investing in?
Heidi?
I think it's a fabulous question. And probably where I'd start is I think the growth of social enterprises has been quite phenomenal over the last period of time. And we're seeing not just in numbers and in presence, but in receiving Australian of the Year for, Orange Laundry and these type of things. So I think we're seeing a shift in not only what social enterprises are able to do, but what our community is asking of business as well. Now, what can happen is we often see a push-pull situation, and that occurs in investment, but it also happens in public policy. And sometimes it's, a community is saying, this is what I want and I want to see more of this. And the more those questions are asked, that's when you start to see the investment community and also government investing in that.
All right, can I go to Chris with one on Slido? I recently heard that a major bank will now not rely on third-party guarantees for approvals. How will this affect young people getting into the housing market?
Well, I think when we talk about young people getting into the housing market, there's a huge number of challenges. So mostly what we see is really around those key things, getting a deposit together, access to finance and all of those sort of things. So what we've seen over the last few years is those hurdles getting more significant in terms of serviceability and other things. So, I probably don't have an answer in terms of what sort of an impact it would be, but we've seen a number of those things have an impact on people's capacity to get into the housing market. So if it is getting, if we are seeing those things get harder, well, that just reduces the likelihood.
Can I go to you, Priscilla, with another on Slido? And please raise your hand and we can go to questions from the floor as well. We've been talking about seeking alignment of 3 levels of government. What is your view in relation to how effective it would be just to have 2 levels of government?
I would be a big supporter of large regional councils and a federal government and not state politics, but that's a personal view, and not one that's ever going to happen. Governments around the world have 3 levels or 2 levels, or, Malaysia has multiple levels plus royal family. It's about collaboration and about having a long-term vision. I think fundamentally what is lacking, we talked about ag tech and research and biomedicine, and Queensland's punching above its weight organically in a lot of research spaces, but we don't really have an honest conversation around which jobs are going to go, which ones are going to be automated, and which are the new industries that are going to develop. And if you don't have an honest conversation, then, history shows it's a generation until the next range of jobs. You get double the amount of jobs from any new technology, but it takes a generation to happen.
Have you answered the question, though? I'm lost. So
Sorry?
Would it be better if we just had 2 levels of government?
Yes.
Yeah. Which 2?
I would choose regional. amalgamated regional councils and federal government.
Yeah, okay, fantastic.
Madonna, on
I
that
answered that at the
question,
beginning.
Okay, so can I go to our next question? And Martin, maybe. Do we think government stimulus could push down the dollar enough to revive the manufacturing industry along with tourism education growth?
I'm not sure government stimulus impacts the Aussie dollar, to be honest with you. The three key components that really support or value the dollar is certainly, as I mentioned before, our AAA rated debt rating, so we're a good place to invest, and that's where investors or foreigners will look at. Secondly, we've still had relatively high interest rates. So when you think about Europe at zero, rates were 1.5% for quite a long period of time. So there was what they call an arbitrage, where investors overseas would buy Aussie dollars to invest in Australia at 1.5%, because back home they were getting zero. So the interest rates is a key component. And then the third component that values our currency is commodity prices. And of course, we've actually seen commodity prices much higher than had been anticipated, given the global growth holding up okay. So we don't see a lot of downside in the dollar at the moment. It may go to 65 against the US, but again, you've got to look more than just the US. The Aussie dollar, we do trade in the Chinese yuan, in the euro dollar, and the Japanese yen. You get the picture. And basically, the Aussie dollar has hardly moved against those currencies. So from a competitive advantage, we're not getting that competitive advantage we'd like to see. We want to see that Aussie dollar a lot lower. That would be really important. But a low dollar alone is not going to make us more competitive. Wages and all these sorts of issues need to be addressed as well.
Can I direct the next question on Slido to you as well? Do we expect the RBA's desired inflation rate of 2-3% might need to be realigned with what has become normalised low interest rates? Could this become as low as 1-2?
Look, it's possible. That's really just moving the goalposts. At the end of the day, the Reserve Bank's had this range of 2 to 3% for quite some time. We are in and going to continue to have a much lower inflation environment around the world. It's a global phenomenon. It's not just happening here. And so whether you move the preferred range 2 to 3 to 1.2, it doesn't change the fact that we need to see higher wages to drive economic activity in the economy.
One again to you, Martin. Where do you think the All Ords will end up by the end of the calendar year?
Has anybody got a coin? Look, our market has...
Get that disclaimer slide back up.
Our market has underperformed the US markets by a significant factor. And I mentioned it in the presentation, which is around earnings growth. And while we haven't got earnings growth, we will continue to underperform. And this latest reporting season would suggest that we haven't got earnings growth again this season. So the biggest component, when you look at total returns in the stock market, the biggest component of total return of the total return pie is dividends. The second business component is valuation. So price-earnings ratio is the main valuation tool, has gone from about 14.5 to 15 times to 17 times. Without commensurate earnings growth, that's about as far as we're going to get. The earnings growth component is quite small, whereas those numbers are completely different in the United States. So I think the Aussie market looks okay. We were due a correction at 6,800. It's now back to 6,500. But if we don't get earnings growth, the market's going to struggle.
Have we got another question from the floor before we go back to Slido? Yes, in the middle here, if we could take a microphone. Thank you, sir. Just raise your hand and we'll get that microphone to you. Thank you.
G'day, Brendan from Westpac Healthcare. I was just interested to know, if you were Scott Morrison, what would you do about securing a second term? Do you have a bold vision? Do you simply just spend more on infrastructure? Don't know, just interested to know what your thoughts might be.
I'm going to go to you, Phil.
Well, to me, it's about the narrative. It's the one thing we talked about leading up to the election with Scott Morrison was, move the discussion away from Labor and make it about Bill Shorten, because that's where the numbers and the data showed. The next term will be exactly about consumer confidence. It'll be about where you were and where you're heading. But no one expects him to change miracles in the next 3 years. So it's really about long-term plan. And to me, what happens, and part of the problem that we're discussing, is that sometimes we just measure the wrong numbers. And I respect economics and all the rest of it, and I'm just the dishwasher in the room, right? But we measure the wrong numbers. And the narrative needs to move to, and Scott Morrison will start to do this, as he has already, is what's not 3 years ahead, but what's 6 and 9 years. But more importantly, what matters to you. And in the great words of Gandhi is, what change do you want to see in the world? Because I think sometimes what happens is we care for the wrong numbers. And it happens in business, it happens in politics, at certain stages without being too... incorrect. It's happened today. We care for the wrong numbers. We care for the wrong data. What really matters is what we believe and what we emotionally engage with. And the sooner the politicians actually connect with what's important to people and make it about people rather than numbers and data and all the rest of it, then they're going to have success. It just needs to take big kahootas from somebody that's actually going to make the step change.
Chris, you're Scott Morrison for the day. How would you secure a second term?
I think it's probably two things. One, reflecting back on Martin's presentation, how the government responds to what the next 18 months dishes up. So, if the next 18 months is at that tougher end of the spectrum, how they respond to that will be important. And then for us, it is very much about, aligning with what Phil's saying, how the government can establish for our sector a very clear, medium-term agenda around infrastructure investment and articulating what that means and how you can contribute to that invest off the back of it. So again, that's why we think an SEQ City deal is a real opportunity, because not only then will we have the federal government saying that, we'll have the other two levels of government aligned behind that same idea that business and the community can understand and buy into as well.
Priscilla, there was a question on Slido a moment ago from Georgie who said, we've all agreed that there needs to be long-term policy settings. How do we go about doing that in Queensland?
I think it's actually bringing, to Heidi's point, the community at the front end and business at the front end. At the moment, quite often policy is done behind closed doors. It might be with three levels of government. It rarely is. You'll normally get three different kind of policy settings, and then it's up to industry or the community to respond. Whereas if you actually have a much more transparent process and you start to call out the structural issues that we're facing and the big changes that we're facing, you reduce fear, you create a vision, and it is about the people. I think that there's a huge amounts of positivity, but it's easy to be fearful around change. And so if our leaders aren't selling hope and a future, and if they continue to be adversarial and generating fear, then the market responds.
Heidi, can you take the next one? That given Australia's decline in manufacturing, is there an opportunity for us to become the global powerhouse for clean energy manufacturing?
So I think there is an extraordinary opportunity for Queensland and Australia from an energy perspective. I mentioned earlier that we have a wealth of resources at our hands. We have a highly skilled, intelligent population. We're looking at what the future looks like. So I think that there is a real opportunity for Australia and particularly Queensland to become the hub. And whether it's an energy hub overall or whether it is a clean energy focus as well. Having said that, I think that all of the things that we've talked about today is what is really needed to enable us to be able to do that, and that's that long-term policy setting, because without it, business just isn't going to invest. And if you're thinking about clean energy manufacturing, we're just not getting consistent signals.
I'll come back to that long-term policy setting because there's been several questions on that. But Martin, should Australia be aligning more with India and China than we should be with America, given your presentation? Someone has asked.
Yeah, saying should is probably pretty strong, but the fact of the matter is Australia is the lucky country. We have on the doorstep China and India, and Prime Minister Turnbull took a trade mission to India in the early part of 2018, and we are already doing a lot more trade with India. And as their economic growth matures, they're going to need better quality iron ore and better quality energy, because if they've got low quality resources or lower quality resources, so they're going to need the stuff that we can produce. So we're in an incredibly strong position to take advantage of that. So from a trade perspective, quite clearly we need to continue those strong ties with China and India. And yes, we do some good trade with the US, but I think those ties are more around the history and the legacy of being allies as against our future in trade really is more within the region.
Someone's just added, what about Hong Kong?
Well, Hong Kong is just a conduit. It's a port, so we don't trade with Hong Kong per se.
Yeah.
I don't even think I've ever seen numbers on Hong Kong in that respect. But what we are going to see coming out of Hong Kong, certainly in the very short term, which is what we talked about, and maybe it's a flight of capital.
Yeah, so there's been 4 questions now come up in relation to the length of political terms and whether we should make it 4 or 5 years, because that would then encourage more infrastructure spending or harder decisions being made. Is that an easier position to win in voterland, that federal parliament be every 4 years? Heidi?
It's a really great question, and it is something that we need to think about. our politicians do have challenges with the fact that our terms are so short, and particularly with the 24-hour news cycle now and social media, campaigns start, long before the actual announcement date. And we've got a situation in Queensland where over the last 47 years, our average term has been about 2.9 years, compared to globally where it sits closer to about 5 years. So there is something to suggest that it is something that we need to look at, and whether that longer term cycle will enable us to get longer term policy. The downside is it means you can't change as often. The only thing I would say with that though is I don't think we can just look at that as an artificial affix to the situation that we have around lack of long-term public policy. I think that governments now potentially need to accept that we don't have the length of multiple terms that we've had in the past. And I think from a leadership perspective, governments now need to stand up and say, I'm here, I don't know how long I'm here for, but I'm going to do a really good job while I'm here, and I'm going to put in place the policy that's needed to progress the state or the country.
Anyone else want to jump in on that one?
Yeah, I believe it should be 4 or 5 years, but I think more important there should be accountability. And I say that no different that if you're applying for a job, you're asked several questions and you're judged on the fact of what you're going to bring to the business. It should be no different, but you should be held accountable to that. And that is, if you stand for no land tax, then there's no land tax while you're in government. Yeah. If you stand for an increase in GST, then you increase the GST. And it doesn't matter whether you agree or you don't. What it means is that you actually head into the election with 5, 10 mandatory items that you need to do. And if the public vote for you, it means that they want them, not that you can then go and do a backflip and change your mind.
And there's consequences if you don't
Correct.
do
it. Correct. And then you vote it out and all the rest of it.
A very popular question on Slido. A bank in Denmark has recently offered negative interest rates for home loans. What are the impacts of negative interest rates? Would that occur in Australia? Martin?
I guess that is a question for me, isn't it? So does everyone understand how negative rates work? Can I quickly explain it?
Yes, please do.
Okay, how long have you got? So let's look at central banks. So around the world, there's a number of central banks that have got interest rates negative. That is, the Japanese central bank rates are negative 0.1%. In Switzerland, they're negative. In Norway, they're negative. And the reason why they've done that is trying to change the behaviours of the commercial banks. So when Macquarie Bank has got excess capital, which we do, and we want to place it in a safe, secure place, we can place it with the Reserve Bank here in Australia, and in theory, we get 1% for depositing that money with the Reserve Bank. But when the Reserve Bank were to move rates to negative, what it basically means is the Reserve Bank will charge you to leaving your money with them. In other words, they're trying to say, don't leave the money with us, get out and use that capital and start lending. And that's, to some extent, it's a stimulatory action. They're trying to change those behaviours. So a Danish bank offering negative rates for lenders basically means the bank will pay them plus the funding that they're going to do. I don't quite know how that really works, but because banks don't normally do that. But what it is far more indicative of the fact that central banks around the world are still trying to stimulate and change behaviours. So when I talked about the lack of business investment here in Australia, this is a common theme running around the world. I mean, the best business investment environment is currently the United States. Core America is doing pretty well. But there's plenty of economies that are in a very similar situation that we are, that businesses haven't had that confidence to invest. And that's what central banks are doing. They're trying to stimulate that interest.
We need to wrap this up fairly soon. Can I go back to the panel with a specific question looking forward? And to you, Martin, first, what is the chief risk you see in Queensland in the coming year?
I don't think there's one risk that's specific to Queensland, but I do think it's a macro risk. And that is if we were going to see a slowdown in the global economy to the extent where we hit a recession, and Australia would get caught up in that, that would be because China would slow, India would slow, our big trading partners had slowed, and Queensland and every other state would be impacted. That would be the thing that I would probably be losing sleep over around trade.
If that happened, would we be in any better or worse position than our interstate counterparts?
No, well, again, if global growth was going to slow in any format to any recession, then commodities will come off. Yeah. Demand from global, and therefore WA and Queensland effectively have more leverage to weaker commodity prices. So that would be a risk.
Phil, to you, you're pretty close to the customer focus. What do your customers want from people in this room going forward?
Well, like I started, they want more for less, but more importantly, it's better education. On Martin's point, I think the big risk that we have is that you keep hitting the SMEs, and Queensland's built on the back of small, medium enterprise. You keep hitting the SMEs, and Martin gave some good stats before, then who's going to employ people? And it's going to be Queensland Government. But who pays Queensland Government? It's all of us. And I think that people don't actually understand what's happening today, how it affects us tomorrow and beyond. So, you know, for our customers, what they want, well, people that I'm close to, is a little bit of security. They're happy to go and slug it away. They're happy to, you know, work a little bit harder and all the rest of it. But what they don't want to be done is that they don't want to keep getting hit with higher fees and bigger costs and all the rest of it. And I often bring it back to ignorance, and we don't know what we don't know. But keep in mind is that SMEs are a massive part of obviously Australia, but especially Queensland. And if we're not supporting SMEs, then who's going to employ people? And it's going to be Queensland Government. And who's employing, you know, who pays for the people that Queensland Government employs? It's all of us. And how do they do that? They do it with fees. So it's pretty circular.
Thank you. Priscilla, you're the Minister for Infrastructure. What would be top of your list here in Queensland?
There's a number of major projects that are under government consideration and have been for some time, so they need to consider them and let the market know if they're moving forward or not. Inland rail, the intergovernment agreement must be signed. Inland freight is important. When we have population growth, freight charges haven't shifted in Australia for 25 years, and we're a trading nation. And the connectivity to Port of Brisbane will open up that whole Toowoomba to SEQ enterprise spine. So those two things triggered to market in the next 12 months would make a difference.
Chris, is there anywhere else in Australia you'd rather be in a business sense?
I think it depends what sort of business you're in. So a lot of, you know, from a property point of view, you know, Brisbane's generally being seen as a stable location, but there are definitely other opportunities in other parts of the country as well. You know, vacancy rates in office buildings in you know, Victoria are 3%. You know, it's a tight market. It's hard. It's costly. You know, so for us, it's really about, you know, making sure that we're leveraging our competitive strength here in Queensland. So if I can pick up on Phil's point around SMEs, so, you know, what I was saying earlier around land tax increases, there's a building in Brisbane that houses a number of small to medium-sized businesses. The way that land tax will flow through into those tenancies or the tenants in that building will equate to about $550 a head worth of additional tax for those businesses. So if we're talking about the cost of doing business, the cost of employing people and those sort of things, it's those sort of cumulative effects that concern us. In property, we've had 9 increased taxes in 3 years here in Queensland, and those things do make it harder.
And Heidi, next week when we all wake up, busy lives, what's the message you want people to remember?
I was getting nervous when I was last. I wasn't expecting you to leave me with the Holy Grail. Look, I think there's been so much wealth that's come out of this conversation, and I think people have touched on different areas, different sectors, different industries. But I think one of the consistent things that we have heard is about the importance of long-term public policy, long-term planning, and working with your community. And I think that if people think about that within their businesses, but then also how we interact as citizens and how it is that we go about participating in debates, whatever that may be, I think we all have a role to play. And we're hearing from our community at large that, you know, they don't trust major institutions, that the people are feeling disengaged. We're seeing, you know, trends away from globalisation. We're seeing people saying, I really want to understand what it is that's going on for me here and how it is that I can, you know, benefit from this and my life can improve going forward. And so I think that when we wake up in a week's time and we think about that, if we think about how it is that we can contribute to the communities that we live in and we work in, I think that would be a very good thing.
Ladies and gentlemen, please join me in thanking our wonderful panel. Both for the generosity of your time, but also the generosity of your comments too. And thanks to you too for making us your lunchtime date. Today we've heard a lot about what needs to happen, and we've got a lot to be optimistic about. Queensland does have a robustness. We go through peaks and troughs, floods and droughts, and I suspect we're a bit like the youngest child. We know what we want and we usually get it. And if that doesn't work, who knows, Donald Trump might think we're a better deal than Greenland. Ladies and gentlemen, please join me in welcoming Tony back to send us on our way.
Thanks, Madonna. So my pleasure is just to thank everyone again. particularly Madonna. She's her first time as our MC. And Madonna, thank you for taking your time today and bringing your insights. You clearly did a lot of preparation, and the questions you asked and the insights you drew out of our guests were fantastic. I'd also like to say, Martin, thanks for your 72 slides. They were all very informative. Was it 72 or not? You went quick anyway, so it was great. And thanks to Macquarie Bank, who are great supporters of our firm. So,
thank you.
And to our other panellists, Priscilla, Heidi, Chris and Phil, again, thanks for your time today. You're all busy people, and we don't take for granted the fact that you've invested some of your time with BDO and our clients. So thank you very much. Could I ask you to thank them again? And to thank to all our guests today, and many of you, you're all clients and friends of the firm. And as I said in my introduction, part of our role is to bring you insights, and there were plenty there today. So on behalf of us, we do appreciate your time, and we hope, and I'm sure you've taken away some insights there and some thoughts that may help you tomorrow and the next day. In the coming days, you'll unfortunately get another email from us, but we are keen for your feedback. The information will be available on our website. I think this is being filmed today, so if you want to go back to a specific idea or any of the slides, I'm sure they're available on the BDO website. And any feedback is important to us, because we do strive to make small changes to our events every year to ensure they're more informative. So thanks for your time today. That's the official end. Please stay and enjoy some hospitality, but we'll draw to an end. If you have to leave, then please do. Thanks very much.